Welcome back to another case study. We're just going from the day yesterday. If you've been following along with the series, then you probably have a better understanding of where we're at in price action. As always, I'm a developing student, and these are just my interpretations of price. And then shout out to ICT. And yeah, this is November 15th case study. So here we have right now, and this is Nasdaq. This is the daily chart, and this is after the day has happened. And if we look at what is order flow right now, like I always say, it's bullish. Order flow is bullish. As we have returned to that 4 hour order block, which is that line right there, and we're coming back down into a daily fair value gap. So notice here in price action as well that there's no fair value gap here. The only closest fair value gap is this fair value gap right here. So therefore, this area in price is all balanced. So if we do want to continue higher, this daily fair value gap right here is going to be a great candidate to do so. Notice how this fair value gap probably wouldn't be the best because, I mean, technically we do stop here at this fair value gap, but the reason why we come down to this one is because this one is more in a discount from probably just this price leg to here or this price leg to here. So basically, we're coming back down to this daily fair value gap, and we are possibly framing an IRL trade setup, IRL to ERL, internal range liquidity, and form this fair value gap to external range liquidity. Yeah, and this is likely what will pan out in the next days. So yeah, we're just monitoring this, and we just had this day in price right here. And I'm just noting the IRL to ERL, but if we look at what price is doing right now, because it's how can we take opportunity, and how can we capitalize off of this model? Every candle within this market maker buy model is not going to be an up close candle, and that's crucial. These down close candles are likely going to set us up for expansion to the upside. As you see today, we had a down close candle. We kind of had an indecisive candle. So what is probably going to happen within the next day? We probably might have expansion. I guess we'll see. So here we have indecisiveness, and we're coming back into this daily fair value gap. Notice how we have a daily bearish fair value gap right here that we're mitigating into. That we're coming into that. So this could cause some form of lower time frame bearish sentiment, and that's what we ended up happening today. And then we come back down into this inverse right here. We've broken above this fair value gap. We come back to this inverse, and we're still holding this daily fair value gap as well. You can project that out in time. But yeah, and I also just wanted to denote this is mean threshold of this down close candle, mean threshold of that. I believe I used the bodies in here. I use the bodies, and then sometimes I also use the wicks, but in this case I use the body of that candle. If we project that out, that's pretty much where we end up putting the low of the day at. So that's what this level is on the chart, is that daily mean threshold. And now this is what the hourly structure looked like if we zoom out, or this is all hindsight. If we look at the hourly structure, this is what ended up happening. So right here we accumulate, and then we manipulate into this into these highs right here, and then notice this red line, this red rectangle, this red box is the daily fair value gap. So we're coming into that daily bearish fair value gap, and then what are we doing? We're distributing lower into an area of fair value into this last up close candle. And the reason why I'm using the wick on this instead of the body, usually I use the wick, the body. The reason why I'm using the wick is because it's in line with that fair value gap. So therefore, I'm going to use that wick. That's where we offer fair value to the market, and then we react off of that. So this is a bullish signature in price right there. Then we come back down. And as well as I wanted to point out how the Dow, we end up forming SMT with the Dow. NQ takes these highs here. Dow fails to take these highs. And notice as well as what is happening here at the same time. Dow is coming into a bearish fair value gap, a bearish 1 hour fair value gap, at the same time when NQ is taking buy side liquidity in a bearish fair value gap. So this, although we are in a market maker buy model, is going to be slightly bearish. And that's what we end up happening today. And here's that 15-minute chart if you want to make your own annotations before I make mine. If you want to go back into this day in price and just study it, because it is a good study, I would highly recommend you do so. You're going to get the most out of this if you do it yourself. Obviously, these are just my interpretation of the price, but if you want to do it, you're going to get the most out of it. All right. So here, anytime market opens, I'm looking at where's the low resistance liquidity, where's the high resistance liquidity. Right here, failure swing, failure swing, failure swing, failure swing, failure swing. And then on top of that, we have this big imbalance that we likely want to rebalance first before continuing to go higher. if we are really bullish, this is actually a bullish signature in price. Although we have a bearish day, this is pretty bullish because we're looking to rebalance this area and offer fair value to the market before then heading higher. Right here, we have low resistance, low resistance, low resistance, low resistance, low resistance, failure swings. And then if we ever have failure swings inside of on top of an imbalance that will likely get rebalanced, that's likely where the market's going to draw to. So right here, we end up taking this high for an SMT in this bearish fair value gap. It's more probabilistic that we're going to take these lows here, and rebalance probably most of this, if not all of this, to then before it continue higher. And that's exactly what ended up happening today. So right here, we get that manipulation move. This is the 7 a.m. Opening price. We have, as you see, we have accumulation, manipulation, distribution. Right here, 15-minute. I like to see, whenever I'm looking at bias, especially for the morning session, this is what I just have come to try to see, and we'll point this out in other case studies, is as soon as we close below or close above, depending on if we're bullish, but in this case we're bearish, as soon as we close below these last up close candles, that's kind of when like my bias is a lot more solidified. So as soon as we close below these 15-minute candles, just the probabilities of us taking these lows have just exponentially increased. So as we see here, we have the last up close candles. We close through that right here on this candle right here. I believe this might be a market open candle. And then that just pretty much just sets the stage here. Like, we don't need to be in here on this. We'd rather wait for confirmation, and then that's what ends up happening. All right, and here are more 15-minute annotations. See in price here, we have an immediate rebalance, bearish signature, boom. We come back here, this fair value gap right here, and then we come back down, imbalance or rebalance this imbalance, or we reprice this imbalance, and then we have, what do we have here? 15-minute change of state delivery, come back down, order block, and then we come back down to this order block as well, reaccumulate. As you can see, this is looking like we might start something to the upside in the upcoming days. All right, and then here's a 5-minute chart. I'm sorry, I didn't really have 5-minute time for you to get your 5-minute annotations. We're looking at a 5-minute chart. We come back down, and we have a balanced price range, so we have a fair value gap in line with the fair value gap. We respect that, displays lower. And if we look at these wicks as well, this is just something that I'm going to note, is the fact that we have these two wicks here on the 5-minute. I just marked console encroachment out of these two. And then look, that creates a fair value gap. That price respects perfectly. We have a lot of wicking on the 5-minute. So for me, I want to see what other time frames are suggested rather than the 5-minute, just because the 5-minute has a lot of wicks. But as you can see here, we have 9 a.m. This is the 9:30 market open. We push lower, then we rebound, then we come back all the way up, have a little Judas swing at market open. We entice traders here, and then we come back up to rebalance this imbalance in this daily fair value gap as well, into this 5-minute inverse fair value gap, and then that's when we get this move lower. And I guess I didn't have this annotation when I started. But what I want to, and this is the 4-minute chart. I should have had this marked, but this is a 4-minute chart. As you see here, at market open, we end up triggering sell stops here, and then coming back up to rebalance that. So that's your Judas swing there. We trigger sell stops, then we come back up to rebalance. Oh, people think we're gonna break out. We're gonna go to these highs here. No, we're just rebalancing this 4-minute imbalance. Sorry, that 5-minute imbalance, and then that's that PPR annotated. And then what I do want to, we're on the 4-minute chart now, so it's like I was saying, these now don't become wicks, and they now become a lot clearer. So we have a 4-minute order block that ends up creating, and just look at the respect to that. That's just perfect. These last two up close candles, order block here. Displacement, order block here, and then look, that's just beautiful delivery. And then this is that sell side liquidity that we had over here with those failure swings. And here is a 950 macro. This is the 1-minute chart. As we can see here, we have 9:30 a.m. market open, and like I've been saying, we rush down lower, we trigger sell stops, and then what do we end up doing? We end up coming back up because we need to rebalance this area. Then right here, we create a balanced price range here. We have a fair value gap up. Then we have a fair value gap down. This is a bearish signature. And notice how this never gets retraded back to. We never really need to trade back into this, which is what you want to see when you are bearish. We end up creating this balanced price range, and we don't come back into this. 950 macro opens up, and then we have a displacement lower, enticing traders to sell short. Then we come back up, and then we're retracing, acting like, oh, we're really going to head back up to these highs, or we're going to come back up to these highs. Nope, we're not. Then what are we doing? We're reclaiming this SIBI right here, respecting that as long as with that order block. This is a nice entry offered within the 950 macro. 950 macro comes in here, and then we end up displacing lower. I never really annotated a silver bullet for this day, but if I were to look at this, like in terms of the silver bullet, we actually don't really end up having a technical silver bullet. I guess this would probably be a silver bullet here, but I would classify this as a silver bullet. A fair value gap that gets traded into in the 10 a.m. hour. Right there, bearish fair value gap, boom, displacement. So that kind of technically is your silver bullet. All right, so after this, we have sell side that ends up getting taken. And I didn't really like make this clear when I did the slideshow, but this is this liquidity over here. So this is that sell side liquidity pool that I'm referencing. Notice how it lines up within a balance. So as soon as we take that sell side liquidity pool, we end up accumulating. And this is just a nice little power 3 as well. We have accumulation, manipulation, distribution. Nice AMD right here. And if we zoom in to the 1 minute, we end up triggering sell side. Then we come back up and triggering buy side into this fair value gap. We reclaim this fair value gap along with that order block. This is pretty similar to other fractal price. We end up accumulating, manipulating, distributing into that 1 minute SIBI. And then boom, look at the speed on that. Speed, we come back up, consolidate, we rebalance. This is left as a breakaway. We come back up and likely constant encroachment up here, and then displacing lower, taking sell side again. And this line here is that 1 hour order block that we have been discussing. All right, and then here is a Dow chart and a NASDAQ chart. And I just want to just show you like the divergence that we end up having in the PM session today. This is a little bit tricky, and I typically try to trade the AM session. So I would have tried to have all my trading done. I would have liked to have had that either that first fractal in price, that silver bullet, or that AMD model. I would have liked to have my trading done by then. But as we can see here, we end up forming SMT with Dow here at these lows. We end up forming SMT here, and then Dow looks to rebalance this imbalance, and then Dow actually sells off to this point in time right here, and then we end up forming an SMT here. Dow ends up displacing lower, and then we reprice higher here. So although we do have SMT at these lows here, Dow continues to sell off, and then we form another SMT in time here, and then just look at the bullish signature right there. So I just want to point that out. And also, as well as that, we have standard deviation projections from morning swings. As you see here, we have the last manipulation move in price, and then we also have the first retracement move in price. So those are mainly the projections that I use, and I'll also use fulcrum points as well. But these are the main standard deviation projections that I like to use. So we have the last manipulation move, and then we have a retracement move. Look at where -3 lines up with. Very nice. And then look at -2 to -2.5. Lines up nicely. Anytime we hit -2 and -2.5, this is a possible reversal. And whenever we respect this area in price, I'm looking for a premium PD array to now look to target. What do we have in terms of premium PD array? We have this high. If you map that out in time, that's what we end up targeting. So we respect -2, 2.5. We have levels that map out nicely with that. We also have the confluence that we're bullish on the higher time frame, and the fact that this is just a retracement in price to then have further expansion. So this is I believe this is a 15-minute blank chart. So if you want to do your annotations before I go in. All right. So here we have an order block. We have the last down close candle. Price changes its state of delivery on the 15-minute time frame here, and then we enter this buy model to reprice to this high right here, and to reprice to some premium PD arrays. We then have a 15-minute fair value gap that we very nicely reprice into right here, then causing bullish expansion. Notice as well as that's happening, we have this down close candle right here. It's supported nicely. All right, and now we're in a 5-minute chart, so if you want to do your annotations. All right, here's a 5-minute chart, and here's that 15-minute order block transposed on the 5-minute chart, and save that order block right there. And I have that 15-minute fair value gap here, but I should have. I believe I have another slide that's a little bit better, and then we have buy side liquidity there. Right, and here is what I was looking for. Here's some better 15-minute. I don't know why the other slide in here. We end up forming SMT here at a current time of day. And then here I'm just marking that PM session silver bullet. What are we doing? We're just consolidating. And then we trade back into this 5-minute imbalance at a certain time of day at 2 p.m. to then have a 5-minute change of state delivery here. 5-minute change of state delivery right there. We're now in buy program. The algorithm is now going to reprice higher. And then that's what we end up having here at that 2-minute time frame, or at that 2 p.m. window in price. And notice here, we mitigate buy side here, and then we come back up to sell side here, and then we come back up to buy side. So that's kind of like a double purge. I don't know too much about the double purge. Like I know that's the MMXM trader, so like credit to him. But I don't really know too much about it, so I don't want to like butcher it. But pretty much we take buy side, then sell side, and then we end up coming back up to here. We take both sides of the range. And then what are we doing as well? We take buy side barely. So we know if we're bullish and we barely take buy side, we barely tap it. That's suspect. So then what do we end up doing? We end up coming back down, taking sell side in a 5-minute imbalance, and this is an area you can look to get active. All right, and here's a 1-minute chart. And all this over here, because we're not at a certain time of day, 2 p.m. or like a macro, I don't really care too much about this price action. I don't really care to look to trade it. And that's just me personally, because I know that over time, over a series of times, it's just going to be less likely to trade in those times. And your chances of probability increase if you do it at a certain time of the day, because the macro or the algorithm runs on time then price. Time then price. Time is crucial. So 2 p.m. And then this is also the 130 opening price, or 130 opening price. We end up having a Judah swing, a false rally lower to then have the real move. Here's those same levels here. Then we come back in, 5-minute imbalance here. And then what do we have here? This is that 1-minute chart. We have a 1-minute fair value gap. That's your 1 p.m. silver bullet. And here's some better annotations. 2 p.m. We've had that 5-minute change of state delivery right here. We end up having this 1-minute order block right here. Price still respects it. And here's that 5-minute fair value gap that we just still respect. If you're going to trade this here, your stop loss would likely be at this low, or else you're wrong. And if you're wrong, that's completely okay. And then just look at the down close candles. We have a down close candle here. Then we have a set of down close candles here. And we also have this down close candle. Respect perfectly. We have a series of down close candles. We respect perfectly. So just look at order flow. What is order flow currently? And then look at what we have here. We have a last manipulation move here, where standard deviation line up nicely with buy side. We end up hitting that perfectly. Coming back down right here, buy side mitigated. Then we have shift in market structure, and then we have a fair value gap. That's a nice 2022 model. So if you're going to short this would have been an easy short. I say annotate it because, for one, it's a little bit counter trend. It's at the end of the day. Although it does end up panning out, I would likely not. This isn't part of my trading plan, so I'm not really going to try to trade this. But we have buy side taken here. We have a low resistance liquidity signature in price, market structure shift, fair value gap. Down close candle gets supported. Another down close candle gets supported. And then boom, we take sell side. And we just immediately reprice higher. End of day macro. And then that's key as well. Notice where are we trying to reprice to? We're trying to reprice back to these highs, but we're also having a stop run here. Stop right here. So the end of the day is closing back up within this range, and we take sell side here. So that is pretty bullish. That is a pretty bullish signature. Here after the end of the day is the 5 minute chart that we end up having. So we come in the market and we have this. We just this just looks like random price action. But then once you deep dive into it, you end up getting a better view on what price did. We had a manipulation move. You can map that out. -2, -2.5, respect perfectly. Come back in. We have the order block, 950 macro. We been over that, and then we come back up, AMD, and then we form SMT at a certain time of the day, and then we also have an SMT here with the Dow as well. We come back into our high time frame levels. We have a 1:30 to 2 p.m. 1:30 Judah swing, 2 p.m. displacement, 2 p.m. silver bullet up to buy side, and then we end up taking buy side, sell side, and then back into buy side, and this is where we end up closing throughout the rest of the day. So yeah, that was this day's in price. I'm gonna keep on doing these. I'm trying to aim for one of these every single day. So let me know if you guys like these. Let me know if I should keep on doing them. As always, I appreciate you guys, and I'll see you guys tomorrow for another one.